500,000 searches in 24 hours. Stop and think about that number for a second. Yesterday, 500,000 people woke up, grabbed their phones, and immediately typed Nvidia Stock into Google. It's the #1 trending topic in the entire country right now. If you're watching this, I know exactly what you're feeling. It's that tightening in your chest. It's the fear that the train is leaving the station and you're still standing on the platform. It's FOMO, the fear of missing out on the greatest wealth transfer of our generation. Look, I've spent years on Wall Street analyzing market cycles. I've seen frenzy and I've seen panic. And what's happening right now with AI is unlike anything we've seen in 2 decades. But this level of hype forces a terrifying question, one that every serious investor needs an answer to right now. Is Nvidia truly the golden ticket to an early retirement, or are we staring down the barrel of the next dot-com bubble, about to repeat the mistakes of the year 2000? Today, we are cutting through the noise. We're putting the emotion aside and looking at the cold, hard data driving this frenzy. Let's get to work. So, why is Nvidia the center of the financial universe right now? To understand this moment, you have to understand that we aren't just looking at a hot stock. We are looking at the engine room of a technological revolution. Think about the California gold rush in the 1800s. Sure, some people got rich finding gold, but the people who made the guaranteed fortunes, they were the ones selling the shovels and the pickaxes. In the AI gold rush, Nvidia is the only company selling high-powered industrial-grade excavators while everyone else is still trying to figure out how to forge a shovel. Nvidia's GPUs, or graphics processing units, are the brains powering artificial intelligence. They aren't just computer chips, they are supercomputers designed specifically to train massive AI models like ChatGPT. Right now, Nvidia has an almost total monopoly on this market. We're talking upwards of 80 to 90% market share in specialized AI chips. Every major tech company, Microsoft, Meta, Amazon, they are in an absolute arms race to build the best AI. To win that race, they need Nvidia chips. They're buying them faster than Nvidia can make them, paying tens of thousands of dollars per chip and waiting months for delivery. That is unprecedented pricing power.
This dominance is why you also see NASDAQ trending alongside Nvidia. Nvidia has become so massive that it single-handedly drags the entire market around. When Nvidia has a good day, the NASDAQ flies. When Nvidia sneezes, the entire tech sector catches a cold. This moment is critical because the market has effectively pushed all its chips to the center of the table on this one company's ability to deliver. But here is where the plot thickens. This isn't just about Nvidia. Nvidia's massive success is causing a tidal wave that's crashing into the other tech giants. Notice that Google stock is also trending top 3 right now? That's not a coincidence. For 20 years, Google has been the undisputed king of the internet, but AI is threatening that throne. Every time Nvidia releases a faster chip that powers a smarter chatbot from a competitor like OpenAI, the pressure on Google ratchets up. Investors are looking at Google and asking a tough question: are you falling behind? Now, don't get me wrong, Google is a titan. They have immense resources and their own AI models like Gemini. But the market reaction tells us that investors are nervous that Google is reacting to the future rather than defining it. This brings up the winner-takes-all debate. In the short term, in the hardware space, it is winner-takes-all, and Nvidia has already won the first few rounds. However, in the long term, the software side, the actual AI applications built on top of Nvidia chips, that field is wide open. But right now, the market is punishing anyone who looks second best. The ripple effect of Nvidia's dominance means every other tech company is now being graded on an AI curve. If you aren't spending billions on Nvidia chips to secure your future, Wall Street thinks you're already dead. Okay, this is the part where most people tune out, but this is the part that will save you money. We need to look at the valuation. We need to do the math. The biggest argument against buying Nvidia right now is that the price has gone vertical. It looks like a bubble. To analyze this, Wall Street uses something called the PE ratio, the price-to-earnings ratio. Let's simplify this. Imagine you want to buy a lemonade stand. The stand makes $10 a year in profit. If the owner wants to sell it to you for $200, that's a PE ratio of 20. You're paying 20 times its annual earnings up front. If they want $1,000 for it, that's a PE of 100. You're paying 100 years worth of earnings up front. That's expensive. Right now, depending on the day, Nvidia's trailing PE ratio hovers in the high double digits or even triple digits, depending on which metric you use. That sounds incredibly expensive. The bears will point to the year 2000. Back then, Cisco Systems was the company building the plumbing of the internet. Everyone said you had to own it. Its PE ratio hit insane levels. When the bubble burst, Cisco lost nearly 90% of its value, and it took 20 years to recover its stock price. So, are we in 2000 again? Here is the critical difference, and it's why many Wall Street analysts, including myself, remain cautiously bullish. In 2000, companies were being valued on clicks and eyeballs, not real profits. Nvidia is different. Their earnings, their actual cold hard cash profits, are growing almost as fast as their stock price. In their recent reports, they showed revenue growing over 200% year over year. Their profit margins are enormous because they have no real competition yet. The stock price is high, yes, but unlike the dot-com bubble, the earnings are actually there to back it up. The market is paying a premium today because they believe AI will be bigger than the internet itself, and Nvidia owns the toll bridge to get there. So, where does that leave us? We have 500,000 people frantically searching for the stock. We have a company with a near monopoly on the most important technology on Earth, but we also have a sky-high valuation that requires perfection to justify. Here is the Wall Street consensus and my personal take on how to navigate this. The general consensus on the street is that the AI trend is real, it's durable, and we are just in the first inning. Nvidia is the undisputed king right now. However, the air is very thin up here. When a stock is priced for perfection, even a small stumble, a slight delay in shipping, a competitor announcing a decent alternative can cause a massive 15 or 20% drop overnight. So, should you buy, hold, or sell? If you already own Nvidia from lower prices, congratulations! The smartest play here might be to take some profit off the table. Maybe sell enough to cover your initial investment and let the rest ride house money. If you're on the sidelines feeling FOMO, do not take your life savings and dump it in all at once today. That is gambling, not investing. If you believe in the long-term AI story, consider dollar cost averaging. That means if you have $5,000 to invest, put in $500 this month, another $500 next month. If the stock dips, you buy cheaper. If it rips higher, you already have skin in the game. The market is manic right now. Your job isn't to react to the mania. Your job is to have a plan so you don't make an emotional mistake with your financial future. AI is changing the world. Just make sure you don't go broke trying to bet on it. I want to hear from you down in the comments. Are you holding Nvidia right now? Or do you think this is a massive bubble waiting to pop? Let me know your price targets below. Thanks for watching, and stay disciplined out there.